Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight the Australian dollar slips further down the slippery slope and now tumbles to a low of 79.10 this morning, and further pressure is still building on the downside. Overnight, the Reserve Bank of Australia Governor Philip Lowe added fuel to the bearish sentiment after the governor downplays the prospects of an Australian rate hike in the near future. He went on to say a rise in global interest rates has no automatic implications for us here in Australia. Lowe told this to an audience at the American Chamber of Commerce in Perth. Furthermore, the hawkish comments from the US Federal Reserve on Wednesday has strengthened the greenback to give additional bearishness to the Australian dollar. In wires yesterday, ANZ has predicted that the Reserve Bank will officially raise interest rates by twice next year, and it is viewed by myself that the market will only start talking about a rate hike in Australia once the Fed has completed its 3 hikes for this year. So that will probably fall in place towards the end of the year. Now, reflecting the quality of the technical implications, I still am viewing for a move towards 78.60. Now, towards this level, from my experience in the past, is that CTAs use a 60-day moving average. As you can see here, I've added it. And if you look over a period when the 60-day average breaks, the market tends to tumble quite heavily or rally. And you can see over the last 2 periods, it did fall from 76 cents down towards the 73 region. And then when it broke above 75 cents, the market got up to the highs of 81. Now, CTAs are also known as commodity trading advisors or hedge funds. So if we do see a break beneath this level of 78.60, then they could step into the market and start seeing the price tumble. So do keep an eye on that level. Resistance on the day is seen capped around 79.60. The euro has rebounded slightly overnight, with the dollar index now flirting around the 92 handle. Should see further weakness. Reason behind that is that the market posted a bearish outside range day and took out 3 days of price action. Now, it is viewed that the market will look towards the support of 118.7080 and down towards 117.9505. Any advances should find a cap now or selling opportunity towards 119.70. With the technical implications still in play to a bearish case for euro, I expect to see this move eventually come through. I'm still a little bit cautious on dollar yen, purely for the fact is that the market is overbought, and also I'm a little bit concerned that the yen strength may return. So I am looking for a cap around 112.70 to 113.15 and see a decline towards 111.80. But towards 110.90.95 could see a short-term base coming through here. Dollar yen is coming under a bit of pressure now, so I do expect to see further risk if we see a break underneath 111.80, but a buy zone towards 110.90. The market is attempting to reclaim for the pound as it looks back towards that 136 handle. I do expect to see this as a sell opportunity. After 4 consecutive times failing towards 136, I am looking towards the downside at 135.20 and then down towards 134, 30.35 and reassess from there. Tonight we have the UK Prime Minister Theresa May speaking in Italy to deliver a Brexit speech. The gold outlook is now likely to find some support in front of that level or established base at 12.8082. At the moment, the market is slightly finding a bit of a bid tone. Now, break above 95 could see a move up towards 99 to 1,308.10. Overnight, it was noted that in the news that North Korean dictator Kim Jong-un has called the US President Donald Trump deranged and saying he will pay dearly for his threats. Earlier this week, in a speech to the United Nations, Donald Trump said he would totally destroy North Korea if they pose any threat or attack the US or any allies. So overall, we demand, or should I say, gold is a safe haven for demand. So I'm looking for eventually a rebound from this level, anywhere from 1280 to 87, and look back up towards the top side. So I'm not going to be holding any shorts as the market sells off. Now, it would seem that silver has rebounded off of that level at $16.80, and you can see here could pose a threat to the upside, with the resistance coming in now at around 40 and then up towards 65. Any weakness should draw demand towards that region. And wrapping up with oil, I'm still bullish, and I'm still looking up towards the region of $52 a barrel, with a base holding at $49.45.50. So that wraps up my daily video. Thank you very much for joining me. I hope you have a wonderful day and a great start to the new weekend.